All right. So it's getting sparse here. My name is Talal Yashiv. I'm a co-founder and managing partner of Spice Venture Capital, the first fully tokenized VC fund. And I'm also a co-founder of Securitize. You've seen my partners around here on different panels and in presentations. And I actually thought if you were here a minute ago, the panel was one of the most interesting panels I've seen here because there was a lot of tension. That's cool. So I'm here to talk about tokenization. And I'm here to talk about tokenization for two reasons. One, obviously, I don't have a real crystal ball, so I can't tell you really what's next in great detail. But I'll tell you two things. One, as one of the pioneers in this industry, makes me feel very old, but this industry is less than a year and a half old in terms of its asset tokenization aspect. Been through a lot of the early stages, and I think we have very good insights as to what's going to happen. The second thing is, my kids will tell you, I'm always right. So it's worth paying attention. I think a good place to start is just to do a very quick level set here. We talked about a bunch of tokens over those 2 days. We talked about Bitcoin. We talked about utility tokens. We talked about ICOs. We talked about security tokens. We talked about asset-backed tokens. We talked a bunch of stuff. I want to order this a little bit and level set the conversation. So it all started somewhere around 2009 with a concept that was introduced, at least in a more massive scale, through Bitcoin, of technology in terms of blockchain as a distributed ledger and tokens that can hold value. And the value in the case of Bitcoin was money, right? It's basically a result of supply and demand. And the money that is being held in a Bitcoin as a token is money, and you can hold it, you can trade it, and in some places you can actually use it to buy things. And then later on, the concept of utility token came up, and the idea of utility token is based on exactly the same concepts, but the value that is stored in the token is future use of a service or a product, pretty much like, you know, the phone tokens that we used to use in the past. So it's a prepayment for a service or use of a product. And the value of the token basically gets determined over time by the demand or the amount of use that is in the market for this token. So the more people want to use the token, the more the network grows. Eventually, it impacts the value of the token. So that's utility tokens. Somewhere in that are protocol tokens, which are kind of twist of that, but it's tokens that are used to pay for protocol services or for use of the protocol and so on and so forth. And with utility tokens came the concept of ICOs, basically using these tokens also to raise money. And very quickly, regulators kind of woke up and said, no, we're not very happy with utility tokens as a way to raise money. And initially, the concept of security tokens came out of that almost as a backlash. But very quickly, it became clear that security tokens have a tremendous value on their own as like a next generation of the securities industry or a unique version of the securities industry. And it became a very hot topic over the last very few months, really. And I'd like to spend most of my time talking about security tokens, about asset tokenization, because personally I believe that this is really a big thing that is happening and will be happening over the next 5 to 10 years, and it's a significant shift in the securities industry. But it's important for me to say that as player in this industry, I personally believe that there's room for cryptocurrencies as currencies. There's room for utility tokens and protocol tokens. And in fact, some of the companies we as SPICE are invested in are using protocol tokens or utility tokens. So it's not like there's security tokens, so everything else is bad. I think everything has its own value and its own purpose, and it's important to remember that. And now I'll move to what I really want to talk about, is asset tokenization, security tokens. And the interesting thing here is still it's riding on exactly the same concepts and the same technology. There's a just distributed ledger. In this case, it's Ethereum that most, not all, security tokens ride on, state of technology. And the tokens hold a value that represents some economic right in an asset, whether it's ownership of an asset, if it's straight equity in an asset. It could be anything like participation rights. It could be rights to some future revenue stream. It could be any economic value or derived value. And perhaps we'll get to some examples. But this is what it is. And of course, it's called security tokens because at the early days of this, the real statement was these are securities. They represent securities. They are securities. And the statement was also, and they will abide by security regulations wherever they're traded and so on. And this is where the security token name come from. So why tokenize assets? I think there was a kind of very lively discussion about it before. But to me, there are certain reasons why it makes sense to tokenize assets. And a lot of it really is related to making assets available for trading globally 24/7 and creating liquidity options. And liquidity is not necessarily a binary thing. It's a continuum, but creating liquidity for many things that do not have that liquidity today, illiquid assets and so on. So we said why tokenize assets, but the question is why should you care? So I think there are a bunch of reasons why you should care, and you should watch this industry very, very closely, whether you're investors or entrepreneurs. It should be very interesting for you. And one reason is the size of the industry. It's a very, very large industry in terms of potential. If we just look at the obvious markets that are prime for tokenization, so between stock markets around the world, real estate markets, debt, derivatives, private equity, which venture capital is part of, you're looking at hundreds of trillions of dollars. In fact, you kind of, in terms of potential, you get to 1,000 trillion dollars in terms of potential market. Obviously, not everything is going to get tokenized, but it means that the potential is huge. By way of comparison, if you look at Bitcoin today, it's that dot, right? It's a little bit above $100 billion in size. If you look at the whole cryptocurrency market in its heyday last year, you're looking at 8 dots like this, right? So we're really talking a massive, massive size of market. The second reason is the pace this industry is growing. This industry is growing very, very fast. We were the 4th security token ever issued end of March this year. 4th. Last 6 months, we've seen over 100 startups in this industry being initiated and growing, very good companies, by the way. We're invested in 8 of them. But a lot is happening, and the velocity is growing very, very quickly. So you got a big market. You got very fast growth there. 2 reasons to make this industry very interesting. The third reason is the ecosystem is being built in motion. Now, you know the idiom of putting the tracks in front of the train. That never works. Don't try it at home. But I think what happens in this industry is the closest thing to this. So what happens in this industry is a lot of assets have been tokenized or in the process of being tokenized, assuming the ecosystem is going to get built. Now, the ecosystem, you heard some conversations about components of the ecosystem, like exchanges and ATSs providing liquidity, but there's a lot more. There are issuance platforms, there are protocols, there are a lot of discussions about different blockchains, legal compliance, things like investment banking, lifetime management of investments in this industry, and so on, tools and protocols. It's really the mirror image of all the ecosystem that exists in the securities industry being built from scratch here, because the whole technology and the way this market behaves is very different. Right? So paying attention to this industry also means paying attention to this growing ecosystem, because this is what I would suggest investing in. Because if you think about the gold rush, people made a lot of money investing in companies making picks and shovels. These are the picks and shovels of this revolution, right? These are the companies that will make a lot of money, and they will make a lot of money because the industry is ready for their services. They're standing in line waiting to spend money on those services. So almost any ecosystem provider that opens doors is doing really, really good business. And at the rate this industry is growing, it makes a lot of sense. And the last reason this industry is very, very interesting and you should care is that it changes the whole way the investment industry is working. Don't have a lot of time to talk about this, but it changed the whole dynamics between investors and issuers. I'll talk about VCs because it's our little part in this revolution. So SPICE is the first fully tokenized fund. And it provides exposure to that industry, to the massive growth in this industry, because we invest specifically in this industry. And how does it work? We issue tokens. The tokens represent LP relationships. In other words, it gives people economic rights to the underlying performance of the portfolio. Whenever there's an exit, the exit money gets distributed pro rata to all token holders. So it's exactly like being an LP in a fund, but it's liquid. So the tokens can be traded at any point. Investors are not locked in for 10, 15 years. They're exposed to exactly the same assets, same behaviors, but with liquidity. It's worth 30 to 50%, arguably much more than an illiquid asset. And it allows much more participation in this game. What do we invest in? Exactly that ecosystem companies set that we talked about before, because we believe that this is where the growth is happening over the next 5 years. And this is where the density of potential unicorns is much higher, because I have not seen an industry that grows at this pace where the cart is in front of the horses. So the industry was created before the ecosystem exists. So the need for the services already exists before those companies come to market. Just to say one thing about this, and it changes all the dynamics, we issued tokens for the first closing of the fund, end of March. People investing then invested at a rate of 80 cents to a dollar per token. We publish net asset value per token report every quarter. And the last quarterly net asset value was $1.38, which means people investing in kind of around end of March made 38 to 75% on their investment, when crypto went down close to 70% at this point. People who actually converted their Bitcoin at that point and invested in SPICE, what they see is as if they kept the Bitcoin, and it's now 19,000 per Bitcoin, right? So it shows another thing that was discussed here. Security tokens are not crypto. They behave totally different in the same markets because they're represented, their value is represented by the assets that are behind the tokens. And by the way, we're accepting investors for the second closing of the fund if anybody is interested. just summarizing, huge industry, growing very fast. There are significant investment opportunities in this industry, and it's disrupting the whole way the investing industry looks. I think it's really important to remember we don't know exactly what this industry will look 5 years from now, because we see a lot of experimentation and variations going on in terms of what the tokens look like and the boundaries between security token, utility tokens, Ami talked about it before, are getting blurrier. It's clear that it's regulatory compliant, and it's clear it's going to be huge. So it's worth watching, and it's worth participating in it. Thank you.